Hello traders, hello everyone. Do we have anyone around? Good morning. Bull wins. Yeah, we will see if Bull wins. uh, Secret God. Okay, we have some fancy nicknames here. So if you're watching this on firstly on TradingView, please let me know if everything works well. And then we also have people watching on YouTube from South Africa, from Tanzania, okay, and from the US. Team is from the US. Hey, team. So we have people from all around. Okay, so everything seems fine. I hope that you had a very nice holiday break. If you're not celebrating Easter, then I'm still happy to have these days when markets are closed or more sideways. Unless you are more in the crypto space, then that's a little bit different. But we are ready for a new trading week. We have plenty of important coverage. So just a second. Someone is asking something in our chat room. So just a second to reply something here. Okay, so we have the US CPI data tomorrow. Okay, so it should be a very interesting, volatile week, in my opinion. Then we have also Bank of Canada rate decision tomorrow as well. On Thursday, we have the Aussie employment figures, and then PPI figures from the US, and retail sales, and also consumer sentiment on Friday. So everything, all of this data will be obviously very important and linked to inflation. So if the inflation is coming down or not, we will see. Now the expectations for the US inflation is 5.2%. The previous reading was 6%. So lower inflation, we know what it means. It means that lower US yields. Lower US yields means lower US dollar. And this can be supportive for stocks, but keep in mind that that's not dovish. So stocks are still will fly much easier higher in a dovish times. But if something is on hold, that doesn't mean it's actually dovish. Also, you have to still keep in mind, not forget that we have bank credit tightening, and the goal of bank credit tightening obviously is to slow down the economic activity to bring down the inflation, so that maybe there is no need to hike the rate. So this could potentially, despite lower US dollar, could potentially mean that stocks may not break that easily to the upside. Okay, so what are we looking here? Look, we have the US dollar index. Obviously, I think that we have some major significant top here in 2020 September highs, and you can clearly see that on the bottom I have this inflation data, and you can clearly see how this is linked, obviously. So if the US inflation is coming to the downside, US yields are coming lower, or potentially could see a potential top, I should say, slowdown on the US yields. And this is obviously correlated with the US dollar. So because I think that eventually inflation will come even lower, they're obviously looking like each time targeting 2%. I'm not sure why is the 2% magic number, but anyhow, it means that obviously US dollar could potentially stay in downtrend as well. Now from an Elliott wave perspective, still looking this to be 5 waves down, and now we either already completed this correction here back in March, or are we only in the middle of a more complex correction, which in my opinion is also very, very possible, especially if stocks will hit resistance. Okay, so for now, at least in the short term, I just think that, and I somehow suspect that tomorrow again we will have inflation coming down, and this could potentially cause a new break lower on the US dollar. I'm also looking at tracking potential bullish formation on the euro. So for now, this so far is matching. And But before we go to this, to some of the wave counts on the euro and the other pairs, I want to bring attention to this intermarket analysis. Okay, so at the top we have the S&P 500, and we can clearly see that for the last month or for the last 4 weeks, yes, that was a low on March 13th. We are in risk on mode. Okay, so in the risk on mode, under normal conditions, you would see that commodity currencies will be doing very well. But if you look closely here, you have Kiwi and Aussie much weaker compared to euro and pound. Okay, so this somehow is important for me, because if I want to be long, because short US dollar, I would say, if I want to be short US dollar when stocks are still looking for potential more upside from here, then obviously my focus will be on pound and euro, because they are stronger compared to Kiwi and Aussie. On the opposite side of this, if we see stocks coming to the downside after making a potential new high and then we top there, then I think that Aussie and Kiwi will potentially be one of the best pairs for shorts, because they are weak, and also the wave count itself shows the potential bearish scenario as well, which I will cover a little bit later. Okay, so for now, it's a very simple story. We still are in risk on mode, so I think that focus should be on euro and pound versus the US dollar. But if this will shift around, and let's say that we see the S&P 500 coming back to these March levels, then obviously forget about pound and euro and maybe focus rather on Kiwi and Aussie. Also, Kiwi, as we know, Bank from New Zealand raised rates by 50 basis points last week. And despite this hawkish action, what we have seen, the market came significantly to the downside on Kiwi. So despite the hawkish action, Kiwi has come to the downside. But why is this happening? Because obviously speculators, investors are looking what may happen on the next meeting. Okay, so if now they surprised, then obviously there are speculations that they won't be a new surprise on the next meeting, right? So maybe that's when they will be on hold, and that's why maybe there are speculators positioning themselves already for this action that will follow in upcoming points, and that's why maybe the Kiwi is coming lower. Okay, now so once again, we are in risk on mode still for now. Okay, and we expect euro and pound to stay correlated and see even more gains within this with this relationship. So if we look firstly on the S&P 500, I want to bring attention to this wave count and to show you why I think that more risk on could be seen, at least in the near term. But before we go to the smaller time frames, well, here is this higher degree chart that I'm tracking. So 3 waves down here to October lows, and then you have now consolidation. And this consolidation, so far, it looks like it can be a triangle. Maybe can be even a completed flat here if we see a very strong rise, let's say towards 4,400. Okay, if that would be the case, then obviously maybe this could be even 1-2-1-2, and you would see a very strong move to the upside for a wave 3. But what I think may happen is that, again, you have these inflation figures coming out, and maybe these markets will not break that easily to the upside. Okay, maybe after the release, but so far I just don't believe that this will be the case. And I will also show you 2 wave counts here. Okay, why I think that at least in the short term we could see more gains. So we are tracking wave D within a triangle. All right, now the wave D should also be made by 3 waves, like I counted here, A, B, C, because normally in each subwave of a triangle you will have a 3-wave structure. But what's the most important is that even if we are tracking wave C with the limited upside, keep in mind that there is a very nice potential resistance regarding the FIP equal lags. Wave A to wave C comes in a little bit higher than recent highs, and that's 4180 and 4200, obviously round figure should be also very important. So we have to see in this wave C 5 sub waves to the upside. So you need 5 waves here before this wave C can come to an end. Okay, so if I label this, should be something like that. Okay, so you can see that 5th wave is still missing. So in the short term, I think that there is room for more upside here on stocks. Okay, and this means that euro and pound could also benefit from that move if the S&P 500 is really going to see or pass these highs from 4th of April. So for now, as I said, there is a still risk on sentiment and potentially could see a new high, and means that euro, dollar and pound, because they are doing quite well, could also see more strength. Okay, now there's also another very bullish interpretation. Let me delete this, which shows the potential scenario for bullish impulse. Let's say that we pass this where I marked the bullish level at 42.47. Okay. Then it means that you will see more upside after a wave 4. But again, keep in mind that after 5 waves up, market will slow down for a 3 wave correction, right? So even if I have this bullish count, I still believe that once we approach 4180, 4200, there will be a potential pullback into the wave 4. Okay, so I'm not expecting any kind of aggressive move to the upside. I think that there can be limited gains as we at least till we get these US inflation numbers out. But based on both of the wave counts, there is still room for more gains, and that's why I'm saying that for now we should focus on the euro and pound. Okay, because they are looking strong, and the S&P 500 for now is still in uptrend. Now, whenever we see a potential bearish turn, very aggressive one for this wave E here, which is my primary scenario, by the way, so expecting a new high and then a reversal drop into the wave E. And when this wave E gets underway, if I will have enough of information from the price chart itself that wave E is really unfolding, that's when my focus will turn back into the risk off mode and we'll look at the Kiwi and Aussie. Okay, so I still think that this, when the S&P 500 will make a new high, I think that euro and pound could actually maybe even move close to last week highs, while Kiwi and Aussie could potentially make lower high. I hope this makes sense and it's not too complicated, because actually it's really simple. You just have to follow the risk on, the risk off flows, and then just focus on which currencies are the strongest and the weakest, and of course apply the Elliott wave count as well. So now for now, as I said, more upside into wave 5, either off a wave C or off a wave 3, doesn't really matter. I think that there is room for slightly higher prices. So now in the risk on mode, I said that potentially we can see more upside on the euro and pound. If we look here, firstly on the hourly chart, which is probably the most important, is notice that there was a 3 wave rise from that 107.13 to 109.70 area, and then that's probably also the most important, you have a 3 wave drop down to 108.30, right? So whenever you have 3 waves to a new high and then a drop in 3 waves within this pullback, it means that market is forming a correction, normally a complex correction. So I'm looking for this to be a triangle. What I like so far, that we have a very nice strong move to the upside. So even if that's going to be wave D or maybe even wave 1 of a bullish case, it doesn't really matter. It means that more upside can be seen while we trade above 108.30. And I am considering, I have this euro on my watch list for potential longs, but because I know that triangles can sometimes become even more complex and tricky. So if we see a wave E pullback towards 108.60-50, I think that this could be quite interesting levels, but I would most likely look to add around 108 if something more complex unfolds here. 107.13 is invalidation level for this uptrend. So looking at the 4-hour chart, here this triangle looking for a push higher. I still think that sooner or later we will retest this February high, simply because there was a drop in three waves, and then we will see if this really will complete the recovery with a potential failure break here, and then we see move back to the downside for a higher degree flat correction, or are we just going to stay in uptrend and this will unfold later on as some kind of an impulse. But in either case, I think that in the short term this recovery is still in a pretty good shape, okay, with more upside potential. Now let's take a look also on we have someone here from Spain, Tenerife Island, very nice. I've been there a few years back, and also from Moscow. Perfect. Okay, so now let's take a look on cable. Okay, so cable here is in a fifth wave, and I think you have to be a little bit more careful on cable, because we have already seen a push to a new high, and not really seeing any strong bullish continuation, I should say, after we reach this high. Somehow the price action is struggling. However, the FIPS shows the potential target here, projections around 1.26, and then you have 1.29 level, 1.3. Of course, there's still plenty of room for this recovery to resume, but just keep in mind that we are still here on a higher degree charts in this fifth wave, and there can be a higher degree correction coming still sometime this year. But I definitely think that bottom major one has been formed here, and that we will see much more upside on cable. But I just believe that nothing will move in straight line, and that we could potentially see a pullbacks here in three waves, maybe later this year. But for now, we will still stick with these targets, as I said, 1.26 and maybe 1.29 to 1.3 zone. And the reason is on the intraday chart, okay? So here we have a pretty simple. So whenever you want, please ignore some of the labels here. I didn't adjust them when I should, okay? Never mind. So here it's pretty simple. I mean, you have an uptrend, okay? A recovery. So if you love the Elliott waves, and then obviously you should pay attention to corrective pullbacks within ongoing trend. So here, first thing, we have an uptrend, no doubt, and it's impulsive. So it means that bulls are stronger than bears, meaning that if you want to place a trade, maybe you better look into this within this direction. So then you scale on a smaller time frames and observe what is the potential structure that you can recognize on a smaller time frame. And you can clearly see that this pullback here is very overlapping, right? So if you will try to count this in 5 waves, which after all would confirm the top is in place here, you would have a lot of issues. So I think that the more proper scenario to look for this pullback is to label this in a corrective way, because after all, probably you will be more right than wrong if in uptrend you will label the pullback in a corrective fashion, okay? And also what is important is that here is a very strong impulse. So this strong impulse also is breaking this channel. So at least in the short term, I think that this cable is in a pretty good shape, potentially even can retest these highs here while the market is trading above 123.45. Of course, pullbacks is something what I normally will look for. For now, we don't have any real one, but if will unfold potentially, maybe even after US CPI data, maybe we get a spike higher here to one. Let me just try to delete here a little bit. Maybe we get a spike to one above 24.57. Then watch out for a pullback when everyone will see maybe the US inflation is coming down. US dollar will see maybe a sharp drop, and then nothing moves in straight line. If something is overcrowded, even if the inflation numbers will be good, you can still see a pullback later on, okay? So just be aware that, just keep in mind that don't try to act immediately when you get some kind of a data out, okay? So maybe we get spike higher, and then later on towards the end of the week, we could wait this pullback still. Okay, so when we get this wave E, as I said earlier, or whenever we get that wave 4 of the other wave count that I showed, okay, still means that there will be limited upside once we breach above these April 04 levels. So that's when potential limited upside on stocks could cause more damage on Aussie and Kiwi. And here we have definitely a very nice looking wave count. Okay, the most important whenever I look for potential trades is to recognize the wave counts on the price charts pretty fast. Okay, if you can do that, then it means that it's the most likely the price action itself it's very clear. Okay, but if on the other hand you have too many different scenarios possible and you're struggling to label the wave count correctly and so on, then it most likely means that this price action it's not worth to take a risk or to invest into this market. So move on or leave it for a while until the price action gets a little bit clearer. But here I think that we have a pretty clear price action. It's bearish trend, it's bearish downtrend. No. So we have pretty nice downtrend. And this rise from that recent lows clearly can be labeled in three ways. You have also a triangle here in the middle. So in my opinion, that's a pretty nice bearish trend, which in fact is ready to resume lower because we have this broken channel. Of course, even this wave count is not 100%. Nothing is 100%. Can be invalidated as well, but the important is to know where is your invalidation level. So because we have this broken channel, I think that here at 67.94 is potential end of a wave 4. So when we see the S&P 500 making that new high, maybe euro dollar coming even higher, that's when Aussie could potentially hit a new resistance here around 6750, 6760 area. Okay, that's the perfect resistance then for Aussie, from where I would be looking for more weakness. Okay. Also, as I said earlier, nothing is 100%. But if we will try to label this wave structure as a bullish, there is 90% chances that you will be wrong. Okay, you will be eventually right. One time, 9 out of 10, labeling this kind of structure as a bullish case. Okay, so again, important is that you try to label the wave count that is probably the most likely to be the correct one based on personalities of the wave structure, based on the higher degree trend. Okay, so as I said, if the stocks will move into the risk off into that wave E on the S&P 500, as I said, that's when this Aussie would be on my primary list for potential shorts. Not only Aussie, we have also Kiwi in a very similar situation. So potential 5 waves down here as a leading diagonal, more importantly 3 waves up. And I've been warning about this potential bearish case already last week, because as I said, that even that I had before that labeled as a potential flat correction with the low here at March levels, March lows, well, this price action here with the triangle did not convince me. That's why I've been saying that, well, most likely we will see a final thrust higher and then a reversal. So far, when this really was confirmed by the market, we have seen a break higher, but bulls were struggling here and completely they were erased after this rate decision. Well, we have now a pretty clear bearish price action, in my opinion. We have a broken channel here, so I think that more weakness could be seen, and even we can revisit these lows from earlier, not earlier this year. Yes, earlier this year was here. Anyway, from earlier in March. But looking at the big picture, still, I think that there will be only limited weakness for wave C. So 61.8% still will be the very interesting support if we see these levels. Okay. Someone asked for NASDAQ. Okay, I have it here. So as I said earlier, keep in mind that stocks will not see that easy recovery whenever there is still policy on hold or even hawkish policy, okay, or bank credit tightening. So I don't believe that we will see any straight move to new high. Stocks will much easier rise when you have cash to be a little bit more cheaper, because there's more cash to be obviously invested into the stock market. But still, looking at this structure, there's a very nice potential bullish reversal going on. But if I just connect swing highs, swing lows, you can clearly see a potential wedge here. So I'm not making this up. I'm just connecting the dots here. And I can clearly see that this wedge, as you know what wedge means, just if you try to ignore the wave counts, we know what it means. It means that there can be potential slowdown coming when the market approaches this upper line. So I still think that this could be potential fifth wave. But if suddenly, let's say, this upper trend line is broken, and you see something like this, and then a weekly close price, let's say below the previous swing high here, that's a resistance, then obviously I will adjust my wave count. Then I will go with this very aggressive bullish view. But for now, I will be very, very careful when we are still trading around or below this trend line. Okay, so in either scenario, of course, you will see this pullback in 3 waves and then more gains. Okay, I can also see that obviously there are some calls increasing, so it means that market is confident that there will be further rise, and we know what it means if something is a little bit overcrowded. Okay, so I'm just aware that there can be some pullback, and maybe we get this pullback here at the same time when we see wave E retracement, the S&P 500. We will see. Okay, where we left. Okay, gold. So we've been talking about and tracking gold, if you remember, last Monday, and then we were looking for this triangle. We said that probably new highs is coming, and then on Tuesday we've seen a very strong move to the upside to a new high. And again, here I believe that everything was overcrowded. Everyone were looking towards all-time highs, and what happens later on, especially when you have moves out of a triangle, you have to realize that most likely this is the final leg within the higher degree structure, because that what triangle causes, because there are a lot of confusion is made within this range. You have shorts, longs building up. A lot of traders will be kicked out within this range. A lot of traders will give up, and then they will say, okay, we will wait on either break, either higher or lower, and trying to play the breakout. So what happens later on? Well, market turns around when everyone tried to jump in and catch the upside. So again, if we go to basics of the Elliott wave principle, whenever we have 5 waves up, it means that we should be aware of a potential slowdown. It doesn't mean that you need to call a top and say we are going down, we are going down. No, you just have to realize that it's a little bit late to play on the long side. It's definitely not recommended for any kind of shorts unless you have a very aggressive sell-off in impulsive fashion. Okay, so this type of a price action to me says that we have to be a little bit more careful here and just be aware of a new pullback, new corrective phase, rather than be surprised. Even if you see break to a new high and then potential reversal lower, it's very possible, but still I think there will be much better opportunities to wait on a clear corrective setback rather than chasing the market up here. Okay, there's also an alternate scenario that this is maybe some kind of a wedge here, and you see break to new high and then a reversal. So even with this different wave count, you again suggest that there will be limited upside, okay, because you have potential wedge building on. Also keep an eye on the RSI, you have a divergence. So between waves 5 and waves 4, waves 3, whenever you have divergence, again, you have to be very careful and be aware of a limited upside. Okay, it means that this divergence actually tells you that bulls are losing strength here. Okay, and that maybe the correction, new one will show up. But if you still want to be on the long side if of metals, then maybe watch out for silver. I mean, gold silver ratio is still doing quite well to the downside. After breaking this trend line, you can see that now we are falling in impulsive fashion. But keep in mind that if that's wave 3, which is very possible, okay, you are, okay, that was a breakdown. You are at the 161.8% of wave 1 measured from end of wave 2. That's the typical ideal zone, okay, for wave 3. And keep in mind that this was quite sharp and extended move. So clearly there can be some slowdown coming. And if this slowdown will really occur, then gold silver ratio, even if it just slowdowns or maybe even moves to the upside slightly, again, this normally means that metals are trying, that bull run on metals is trying to slow down. Okay, but for now, yes, of course, that's still a downtrend. Now that we will see a wave for, that's only speculation. I'm just respecting the Elliott wave rules and guidelines and FIBS, what may happen next. Okay, but for now, yes, there's still a downtrend here. Metals are still in uptrend. That's why I said earlier, if you want to chase here the markets, then the metals, then maybe forget about gold, look instead at silver. Now, looking at the silver here, we have a pretty nice ongoing uptrend. You have higher highs, higher swing lows. It means that it's an uptrend, a continuation of an uptrend that technically is correct and valid as long as the previous latest swing low remains in place. Okay. Also, you have a very nice consolidation here. So maybe we get another pop-up here, but can be a fifth wave. But still, I think that there is a consolidation. There's also this high going back from 2465. It's a very nice, good support that holds now. So as long as we are, also you should watch this trend line. As long as we are above this trend line, still this wave 4 could unfold maybe a little bit more complex, but eventually we should see spike to a new high. But I'm not sure if this will happen ahead of the inflation figures tomorrow. Okay, now let's take a look on crude oil. Okay, so crude oil, to recap this one, as you know, we've been tracking this triangle. We predicted this drop for a fifth wave, and then when everyone got extremely bearish, we were warning about potential limited weakness because we have seen prices in a fifth wave. And what's happening now? Very strong reversal to the upside after the OPEC has decided to cut the production because they think that demand will decrease. So obviously they want to stabilize the oil prices, and looks like that we are stepping into a new correction, okay, new corrective phase. So we can see more upside. Obviously the pullbacks will occur. Looking at the 4-hour chart, clearly you have very nice breakaway gap. And as I said already last time, whenever we see this gap that stays open, let's say for the first 24 hours, then it can stay open for a longer period, for a week, 2 weeks, even more. But whenever this gap will be filled, that's the potential new interesting support. So first it's like a magnet, then it's complete the reversal signal after the gap is filled, because it means that new orders were most likely filled in that price range. Also, the support in such case is at 75.70. So ideally, there will be new wave forward that will try to fill this gap, and then we will see more upside. There's also an alternate scenario which maybe shows that we are already in a wave for higher degree. You can see it here, and then maybe this gap will be filled already sooner than I think, and then we'll see move to the upside. But again, I suspect it's a correction, but whenever you want to chase this market, keep in mind that much better supports would be at the gap fill. Okay, and for now, that's still not the case. So ideal support around 70. Also, if we try to use the FIBS, let's assume that wave 3 has ended here, just to see what we get. The numbers, so sometimes 38.2% is usually the ideal support for retracement of wave 4. But whenever you have the extended wave 3, a very strong extended, then even 23.6 can be important. Okay. However, the 38.2% comes in right around this gap. So I think it's a pretty interesting levels. Okay. Not to mention some kind of a potential head and shoulders, bottom formation, also very possible, left shoulder, head, and the right shoulder. Okay. But as I said, I just think it's much better to wait on a deeper pullback. Keep in mind that it's still what? It was a very strong run, more than 20%. So in a relatively short period of time. So I just think that there can be some, okay, it's worth to wait on some of a deeper pullback. Okay, but as you said, crude oil is in uptrend. It should resume higher. So I still think the dollar NOK could potentially see more weakness. I'm a little bit disappointed about dollar NOK. I thought that it will be trading much lower. But as I said earlier, commodity currencies, as I showed you here, are much weaker. So Kiwi, Aussie is very weak. So obviously it's not a surprise that NOK is the same. Okay, so where I have it. Okay, but still, there can be more weakness coming. Maybe just short term for this trend line retest here, especially if you are in the right shoulder after this broken rising trend line. Looking at the 4-hour time frame, sorry, that's a 1-hour time frame. It's probably the most important structure at the moment. You can potentially count 5 waves down, and then you have 3 wave sideways move. Ideally, that's going to be a correction. So again, I don't expect any major moves ahead of the US inflation figures. But if we get US dollar selling off sharply, then I think the dollar now could still be very interesting. So the first support is at 1046. So that's the key support. But if we can break the second support, the second swing low, the most important one is at 1040. So if we suddenly see something like that, and then you see a daily close price below that level, okay, then most likely this will suggest that we have a top here. If we see just a spike to the upside in the middle of the day, and then by the end of the day back reversal to the upside, that's not a confirming price action. So that's why I'm always repeating that try to focus on a daily close price. Daily close price is the most important price of the day, okay? Because if you see ups and downs between the day, it doesn't really matter if there was a bull run, but then at the end of the day, the whole bull run was completely erased. Then it means that bears are in charge, okay? So that's what you have to consider as well. But of course, higher is the time frame, more important is the closing price and formation of the potential candlesticks as well. Okay. Now, let's take a look on dollar yen. So, dollar yen is showing some support here. We talked about this importance of 130 area, and as you know, we have a new governor in Bank of Japan, and so for now they will stick with the current policy, and that's why we are not seeing any shift in major regarding the major trend here. But I think that this correction still could be just temporary, and potentially we could see more weakness. So when or from where this weakness can come from? Well, obviously from the US yields. If Bank of Japan policy remains as it is, no big changes for now, then obviously this pair could be driven from what is going on in the US. So the US yields, if they come to the downside, this could potentially drag dollar yen to the downside as well. Now, looking at the 4-hour time frame, I see potential leading diagonal. We've been tracking this one. We were looking for a low here around this lower trend line. We have seen a very nice bounce, and then we called for a free wave correction. We said the very nice resistance is around 134 to 135. There's also the 61.8%. So now you are running, maybe approaching by the end of the week towards these levels, and then we'll see what will happen there. If we see this 135 to hold, and then market turns back towards 132.50, I think there will be opportunities on the short side. Now, I definitely want to see how the price action will respond to the US figures, but definitely I do not want to chase aggressively immediately here ahead of the data, even if we rally towards 135. Okay, I want to see some kind of a confirmation that this resistance, if I identify resistance, I want to see that this resistance will really hold. Okay, so it's important for me to see our response back to the downside if this level is retested. Also, since I mentioned, it depends what the US note yields will do. Now here we have the TLT, which obviously tracks the 20-year bonds, and what we see here is a potential bullish scenario. So more upside here. Now clearly a reversal ABC, so I'm expecting more upside. So more upside here equals to lower US yields, potentially equals to lower US dollar. Okay, hope that makes sense. Now let's take a look on CAD yen. Since I bring this one because we covered this, we covered it a few times. So here we have 5 waves down. We have seen a failure break to a new low, which lead to a bullish reversal. So 5 waves downs are finished. And what would you expect? Well, a 3-wave correction. So with bullish crude oil, with still stocks in uptrend, maybe if you're looking for shorts on Japanese yen, then forget about dollar yen maybe for a second, rather look on CAD yen. So I think that CAD yen could potentially see more upside, but looking at the intraday chart, maybe much better support would be here around 97, 96.50 up to 97. Yes, that's the area. Even if that would be kind of a flat, then obviously that would be your key zone if we see a retested. I would not be chasing this market up here. I still think that there is possible to see this pullback coming. Okay, now finally we have a few minutes left. Bitcoin. Okay, so we've been tracking, we highlighted 2 different interpretations for Bitcoin. Most important is that if you try to again forget about the wave principle for a second, what do you see here? Well, we see a very strong, no, that will not work. We see, the problem is that if I use the arrows, then all of the letters will show up. Okay, let me try this way. Okay, so here, what's important? Well, the important is that this is an uptrend. Okay, we had a very strong uptrend, and then what we have is the period of consolidation. Okay, so normally when you see this pose, that's totally normal after that strong move. Okay, and with this overlapping pose here, normally it means that market somehow is trying to collect new strength for a new breakout, and we see a very nice continuation higher. So clearly that's also expected from an Elliott wave perspective. Okay, because normally the market will be in continuation mode after the corrective phase. Okay, and then you will see a new upside. If we see, on the other hand, 5 waves up and then a sharp reversal in 5 waves, that's the bearish reversal signal. But that's not the case on Bitcoin. So far, we had a very nice consolidation that is now taking the price higher. Now, with that being said, we've been looking for 2 interpretations. So the first and the primary is still that we are in potential new bullish 5-wave phase. So if I label all the letters for you, okay, so let's assume that that was a wave 2, and you're now in the middle of a higher degree wave 3. So obviously you have been expected more upside when there was this consolidation going on. Okay, so with this wave count we were bullish, but even we had another wave count which suggested that there is limited upside. It's always good to have another alternate scenario, so that if you're planning on the long side, that you can define different and more more value to risk reward scenario with the closest target and not be too greedy. Okay, because if you're identifying this potential wave 5 target here around 30,000, then obviously your upside potential can be much bigger if suddenly this wave 5 becomes an extended wave 3, like I showed you on the earlier count. Okay, so it's always very important that you're not expecting too much from the market. Okay, and that you are focused on minimal targets. So here we are now approaching 30,000 from this triangle, which was our second count. So this one is also still very valid, but for now looks like the bulls have some strength to continue even further, especially if we can stay here. I would most likely say about 28,080, around there. So as long as we are above that level, of course, you can easily see more upside based on this interpretation, because if I label this as well, you could have this something like that. Okay, so if this level is broken here, then obviously that's your invalidation here, right there. Okay, that's why this price is important. So break or drop back below that level will most likely put this wave count in play, and which later on will suggest that market is in a new corrective setback. So supports, then lower supports could be retested. Now, also looking at the Ethereum also in uptrend, could potentially be in a higher degree wave C, with the target here around, this goes even back to May 2022, so almost a year back, around 2,200. Also 2,000 is the first potential resistance from psychological perspective. You also have this level that was obviously very important here back in August of last year. So we are approaching some very important levels. Again, I would not be, despite still an uptrend going on, I would not be chasing this market up here, because if you look here of this wave count, not wave count, just of the price action, you can clearly see that this was a very strong move, but here the bulls are now struggling, right? So I'm not really convinced about this wave count, and I would definitely not be looking for any kind of a risk here, since I realize that maybe this could even be some kind of a ending diagonal, and again there can be limited upside. And obviously, as you know, crypto community is always trying to focus on very big levels, very big numbers. So like round figures, everyone looking to buy at 10,000, looking to sell, I don't know, at 50,000, 30,000. You are now at 30,000 at Bitcoin, approaching Ethereum 2,000. So definitely, if you are long, if you're positioned long for the last 6 months or so, maybe just consider that we could potentially approaching some kind of a resistance up here. Okay, traders, please give me your feedback. How was this webinar? I know that you had some of the questions, anything, but we are running out of time, so I will make sure to try to keep more eyes on this chat and your questions so that I can cover some of the markets. So if you like this webinar, please subscribe to our channel, press a like, leave us a commentary below, and make sure that you will be with us in our new webinar, probably again next Monday. So you have to put your notifications on to make sure that you will be notified on time whenever we go live. Okay, traders, again, thank you for your support and be careful. Bye.